When you say that Tier 1 banks did certain things, can you tell us what some of those certain things were?
Yes. They did many things, but two things stand out in my mind as being most important. The first being that the bank could lend a large amount of money to Enron, usually in a short amount of time. And over time, we designated that level of lending to be about $1 billion. So we were looking for banks that would be able to lend $1 billion to Enron on short notice. The second criteria in my mind that was most important was that the bank could come up with structures and transactions that would help Enron creatively solve its financial reporting problems.
What do you mean when you say solve Enron's financial reporting problems?
Well, Enron had a problem in that its the results it would otherwise have published from just its business operations were usually insufficient in order for Enron to maintain its investment-grade credit rating or to meet its earnings targets. And we were looking with banks who could help us solve this problem, meaning doing transactions that would, as we described internally, fill the gap between what was really happening inside Enron and the way we wanted Enron to appear to the outside world.
Why not just record the funds flow as financing rather than try to figure out a way to create funds flow from operations?
Well, Enron could have borrowed the money, but that was the problem. That would show up as debt on Enron's balance sheet, and the interest payments associated with that debt would have shown up in Enron's income statement and funds flow statement. Enron desired to have what otherwise was economically and substance a loan look like something other than a loan so it could achieve a higher credit rating.
And did you discuss Enron's financial reporting objectives, including the need for funds flow from operations with senior bankers or the people that you dealt with on these transactions?
Yes, I typically did as part of my ongoing dialogue.
And did you believe that the folks you spoke to at those banks understood that the transactions were being done to create the false appearance of funds flow from operations?
Based upon my conversations with them and based upon the types of transactions structures that they brought back to Enron to solve these problems, I would say yes.
And why do you believe they understood your financial reporting objectives?
Well, for a number of reasons. First of all, these, in my opinion, were very sophisticated financial people. We talked explicitly about the issues Enron had with funds flow from operations and earnings. We even had slides where we discussed those. So for those reasons and some others, I believe they understood it.
In some instances, did the bank itself create the structure to meet the Enron financial reporting objectives?
My understanding is yes, in some cases.
And in some instances, was the creation of the structure an iterative process?
Yes.
With what department at Enron?
Typically, it was my department, what we called global finance. My employees would work with the bankers or the specialists within the banks to finalize the structures.
And why were some of those structures created as an iterative process or together with the bank and your unit?
Well, I think it varied from transaction to transaction, but generally speaking, the purpose of the transactions was to achieve the objective of changing how our reported financial statements looked, and that required creating structures that accountants would view a certain way, or attorneys might have to view a certain way to give opinions on.
And did your staff work together with bankers to create those structures?
In some cases, yes.
Was there a time during the calendar year when you went to banks with your problems more often than others?
Yes.
When was that?
As a general rule, I'd say at the near the ends of quarters, financial reporting quarters, which happen to be calendar quarters as well, and year end.